make a comment. Want a mic check for both of us, if you would, please.
Okay.
Anyway,
I was wondering if there's not a lot on people on today, but I was just wondering real quick if the link was right that I sent out. Looks like we got a few. Okay, we're good.
All right.
Greg, kick us off, buddy. What do you got this morning?
Okay. So what I'd like to do is I'd like to touch on briefly Evergrande. There's no real new news going on right now with Evergrande, but this is a problem that is not going away. So I just want to remind everyone by touching on it pretty much every week. Look at this ad or this news right here. The chairman of Evergrande has been, I'm sure, forced by the Chinese government to sell $1 billion of his own personal assets to try to prop it up, but it's not going to be enough. This whatever money this guy has, it's not going to be enough. At some point, unless the Chinese government intervenes, then Evergrande is going to default. It's inevitable at this point. We're watching closely to see how the Chinese government handles that. It looks like they're trying to carefully do it slowly, but that's what's going on right now. So, that's all I really want to say about that. Keep an eye on that. The problem is not going away.
I know that's a story you've been watching closely.
Yeah, and last week you weren't on for this, but I reported that the Fed chairman Jerome Powell also made an announcement that this problem with Evergrande has the potential to hurt the U.S. economy and stock market. And that should be plastered on the front of every financial news site in existence, from the Wall Street Journal to Bloomberg to Reuters to everybody else. But it looks like they buried it because it was hard to find that, actually. So no one wants to spoil the party, apparently.
So yeah, there you go.
Apparently seems to be what's going on, but you need to be aware of that. It's a big deal. It could affect your money. Okay. Now I want to teach you a principle today about how to spot relative strength and weakness. It's pretty easy. Generally, most stocks go up when the market is going up over time. I'm not talking about one day necessarily, but over days, weeks, and months. If the market goes up, say 1%, as represented in this simple chart that I made this morning, then most stocks are going to go up about 1%. If you see stocks that are relatively strong, they're going to go up more than 1% over time. You're going to be a little bit stronger than the market, or at least as strong as the market. If you got a stock that is relatively weak, it's still going to go up, like in the red arrow here, but it's not going to go up as much as the market. Let's look at this. When the market is going down, say over a few weeks, or like it did earlier this year for a couple months there, like in September. Okay, well, pretty much all stocks are going to go down, but relatively strong stocks are not going to go down as much. Relatively weak stocks are going to go down more. Okay, so let me show you then how that looks. Again, it doesn't matter so much over one day, but it matters a lot over weeks and months. So let me show you what that looks like. Here, hold on. I'm going to pull up a chart. Can you see the whole chart there? Let me see if it's cut. Okay, you can see it.
Sorry, I'm muted. Yep, okay, I see it.
Good. All right, let's go to the right side of the chart. So this is the diamonds, DIA, which represents the Dow Jones Industrial Average. So you can see that this represents the whole market, and we're really close to the highs. We're just a little bit off the highs right now. So you would expect most stocks to do something similar to that. So let me show you what that looks like. Let's look at McDonald's. McDonald's is also very close to the high. Over the last 6 months, maybe the Dow Jones Industrial Average has gone up, whatever, 5%, and I'm just making that up, by the way. And McDonald's should go up about 5%. Maybe it's 4% or something, but it's still near the highs, is the point. Let me show you what it looks like when you see relative weakness. This is a chart of Walt Disney. This is where we're at with Walt Disney. As you can see, Disney is well off the highs. It's currently trading around 158 and was up over 200 back in, when was that? I think that's March. Let me go down. Yes, that's March. So it's been off the highs for several months, going sideways up until it gapped down last week when it announced earnings. Okay. The PE ratio before it gapped down was over 200, which is astronomical for a slow growing stock like Disney. Even now that it's gapped down, the PE ratio is showing to be around 145 to 150. That's way too high for a stock that's growing maybe 5 to 10% per year. Okay. A normal, at today's prices, a normal PE ratio might be 20 or 25. It's at 145. That's a pretty good indication that it's got plenty of room to go down from here. And that's why I issued the debit spread for Disney. Don't get concerned by a debit spread. They're super easy. They're different from credit spreads. With a debit spread, you have to pay money for it because you're buying a put. We bought the 155 put on this. And then to offset the costs of that, we just sold a lower put all the way down to 145. It really brings down the price of doing this trade. So if it goes all the way down to 145, we're going to make a max profit. And we did it for only, the entry fee on this was only $200 we had to pay. This is the kind of trade that if this thing keeps trending down like it looks like it's going to, we're going to make a good return on this. And so that's why we did a debit spread. I don't want to do a credit spread on a stock like this because it could bounce back up. And so the right trade for this is going to be a debit spread. Again, if you just shorted the stock outright, it could bounce and you'd have to get out. With less money, using a debit spread, using that leverage for only $200, we can control 100 shares of this stock to make money on it as it goes down. So we're going to watch this closely and see if it continues to trend down from here. So far, it looks pretty good. Let's look at another stock. We're not in this stock right now. We have been in the past, but this is another stock showing relative weakness.
While he's pulling up that chart, feel free to ask any questions if this is some new stuff for you, talking about the debit spreads and the relative strength. We're here to answer any questions you may have.
Absolutely. Thank you. So again, a debit spread is simply buying a call or a put and then selling another call or put further away to lower the cost. And it does lower the cost quite a bit to enter the trade. So you've got a low cost way to potentially make a very nice profit, multiple times what you invested. So on this put for Disney, if we invested the $200, we could double our money. Or if it's not working out, we could get out and lose maybe $100 or $50. That's a great way to enter the trade, to risk a little to make a lot. And that's what we're always trying to do in the stock market, to put it simply. 3M is this chart right here. Again, you can see this stock is well off the highs. It's struggling in the recent few weeks to even go as high as it has off the lows of 173 of about 3 weeks ago. We're currently up to about 183, it looks like. And so it's struggling pretty hard just to get up to here. This is an excellent target to sell short. I mean, think about it. If a stock can't go up when the market is going up, What do you think the stock is going to do when the market goes sideways or down? It's going to go down hard. And so this is going to be a prime target for me to sell short, along with Disney, which I am short in that stock. And other stocks that are also well off the highs. It's a pretty good indication they're a good stock to sell short. I get your thoughts on pins for a long. Okay, let's take a look. Pinterest. Okay, so this is where Pinterest has been. So Pinterest is below the 50-day moving average, well below the 200, I think that is. Yeah. Let's see here. Pinterest is definitely in a downtrend. Okay, let me look real quick and see for the long term on this. That's a 1-year chart. Yeah, so this is definitely in a downtrend. And it's only popped its way up just a little bit. I'd be much more likely to sell this thing short than go long on this. I don't like it long at all because it's still in a steady downtrend. Furthermore, looks like it gapped down about a few weeks ago, about 3 weeks ago, and it hasn't even gone back up to the point where it gapped down to. So
Was
this
that
is
an earnings
showing all
gap?
down, not up. I don't want to go long on this.
Was that earnings where it gapped down a few weeks ago?
Probably, since we're in the middle of earnings season, I'd have to look to see. But that's probably it. So at least right now, it's not saying you want to buy this thing. All right. In fact, it might be at a spot right now to sell it short because of the bounce there. Little bounce might be headed back down. So let's get a closer view on this. Okay, this is the short-term view for the last 3 or 4 months on Pinterest. So it's just bounced a little bit off the 6 to 12 month lows here. So definitely not something I want to get into. Earnings was on 11.4. Okay. 11.4. So that gap was something else. Okay. Anyway, so not too interested in moving forward with pins on the long side, Pinterest. Okay. Want to show you a stock that I follow closely because it's my cannabis stock. Best cannabis stock in the industry so far that I can tell. Again, let's go to a little.
I don't know if you saw Steve's show on Monday, but he's really high on the cannabis industry. What ticker are you looking at?
This is Tango Charlie Nancy Fred, TCNNF.
Okay.
Now, over the last year, over the last several months anyway, Pinterest has come way down off the highs. It went up to about over 50. Now it dropped 50% to the lows of about 2 weeks ago. But on that big candle day that happened on November 7th, looks like, that happened before earnings came out. A big up candle on heavy volume. That almost looks like insider trading to me because it comes out right before earnings. I can't prove that, but anyway, I took note of that and I bought into that right there because right before earnings, I think it's going to take off. It did announce very good earnings and it's bounced up and it's gone way up over the last 3 days and then come back down just from the highs. But it's still not anywhere down below, a week ago, down around 27. So this to me looks like it might be poised to take off for another run. I made 4 times my money on this last year. I bought it at 10.70 and sold it around 45.
Nice.
Which was a very nice long-term trade there. I think it's going to do it again. It will do it again if they can keep up these financials. Got to remember the cannabis industry is growing very fast, and this is a great stock. So as long as the market doesn't really come down hard, the economy continues as it is, and this stock the company keeps growing money as fast as they are, this thing will go back up to over 50 again within a year. Okay. Of course, there are a lot of caveats in there. You never know what's going to happen, but that's how you judge it. It looks really good. Okay. Let's see, what else have I got on my radar right now? Target just announced earnings. They actually beat on earnings, but they said that their margins were squeezed a little bit by higher labor costs and also the supply chain problems. And so they gapped it down. When you see a gap like this, let me get it in closer. Hold on. When you see a gap like this, based on otherwise what would be good news, you got to watch it carefully because you don't know if they're really selling it off or if it's like shenanigans so that they can buy it up from here. Now, since just today, since the gap down, it's been volatile, but it's really close to where they gapped it. So this might run back up. I'm going to watch it. I might enter a trade on this within the next day or two if it starts to trend up or down from here. Okay, but I'm watching it closely. Because of this same news on Target, we got something similar going on with Walmart. So let's look at Walmart. Looks like Walmart gapped down yesterday and it's held its value. So at the moment it's going sideways. Another one that might reverse and head back up. Usually Walmart and Target are generally headed in the same direction because they're both similar retailers. So I'm going to be watching both of these, see what happens. Might be a good trade on this. Anytime a gap happens, it might be a gap and run where the gap wasn't far enough and it's going to scare everybody and the price will trend down from here like Disney is, or they could gap it too far on what's really not bad news in order to give themselves really good prices to buy it back up and drive it back up to 150. So I don't know which one it is. I'm going to watch it though. But that's what's going on. Okay, let's see what else have we got going on here. Dow Chemical is a stock that again is not doing very well. Within the last 2 months, it's in a sideways range. The bottom of the range is about 55. The top of the range is around 61. And so we're towards the top of the range. I'm really thinking about, since it's in basically a long-term downtrend, it's going down before it went sideways, I'm more likely to sell a call up around 61. Thinking about doing that pretty soon here. So depending on the prices of the options, how much money we can get for that risk, I am considering doing that trade.
On Dow Chemical?
Yes, that's Dow Chemical. Dow Chemical is another one of those great big slow-moving stocks that are in the Dow and the S&P 500, and it's not growing super fast, so I don't expect it to have a big run up, especially if the market is going up and it isn't. Mm-hmm. Okay, showing a lot of relative weakness here. So this is a stock I might even sell the stock short or buy a put at some point, but right now probably looking at selling calls up around 61, and I'll be looking at that shortly. Okay, let's look at MGM now. Another stock I'm looking at. MGM, the big casino in Las Vegas. MGM is in a great big long-term uptrend. Got a little pullback here from the high of around 51 down to a low of about 45. Looks like it might be starting to curl around and go back up. Now you notice that even though it's only up a little today and it was down yesterday, the candles over the last 3 days, except for the tail on the bottom yesterday, the candles are generally going higher from the low of 3 days ago where it bottomed out at 44.61. So that, on a very short time frame is bullish. I want more confirmation. I want to see it go above 46, and then I'm going to have, a belief it's probably going to trend up from there and go back up to highs of, say, 51 or so. If that happens, that might be a good little short-term trade to make a good $5-6 per share on a trade like this. But that's just one that's on my radar, one of many that I'm looking at. If you want me to look at a stock like Ray asked me to look at on Pinterest, go ahead and type it in. Now's the time. Just looking at lots of stocks on the radar, talking about what's going on in the marketplace. A lot of stocks are in a downtrend in the market. A lot of stocks are in an uptrend, and a lot of stocks are just kind of dead in the water, going sideways.
We have 2 active trades going right now, correct?
Yeah, let's talk about that. Disney, we did the debit spread on Disney, even though it hasn't gone yet all the way down to 155 for the put that we bought. Disney has still made money since it went down yesterday. I haven't checked it this morning. So for the moment, it was headed in the right direction. Let me check on Disney real quick. Okay. Looks like Disney's down a little bit more today, down 75 cents. You can see in the top right corner there. So those puts that we bought are going to be worth a little bit more. As long as it keeps trending down, we'll be golden on that one.
Very nice.
So there's Disney. We did get stopped out of a Snap trade. Let's look at Snap. These guys, they're really good at pulling the trigger on people's stops. So we got stopped out on that day that it's 52.02. And then, of course, the stock started to go up a little bit. Some of us have bought a long-term call out 2 to 3 months is what I'm calling long-term, thinking that it's going to fill the gap and go back up to 75. It's not showing that it's doing that yet. It has bounced off the lows, but I don't see a big trend up. If it doesn't start to trend up within a week by next week's show, if I had bought those calls, I'd get out. If I had bought a call spread on this, I'd get out because it doesn't look like it's going to happen. It should start to happen pretty soon if Snap is such a great deal down at this price. Still think it could happen, but I want to see it happen soon and not just let my time decay go against me when I buy options. If it starts to show that it does that, then maybe I will, buy back into that trade. Back on November 8th is the day that as it was starting to trend up, I thought it was going to trend up further from there, and it went sideways instead, basically. So we're not getting the action we want yet. If we don't, pretty soon we're going to get out and we'll take a small loss on that trade, but really not too much. We're not risking that much from having entered that trade. So we're doing what we want to do. We're risking a little to make a lot, hopefully. It's always a curious thing trying to predict the future. That's exactly what we're doing. We're trying to predict the future prices of stocks, and you just never know what's going to happen. So you take good risks, and sometimes they work out. You make a good chunk of change. Sometimes they don't. You take a small loss, and that's fine. Go on to the next trade.
You want to take a look at Visa?
Hold on one second. Yes, I will. I currently have a 53.50 put credit spread on Snap. Okay, great, Neil. Good job. Okay. The thing is on this with Snap, it's currently trading, looks like at 54. It could again briefly snap down below 53, but then intraday go back up above it. So on your trade, Neil, I probably wouldn't want to exit that unless it closed below 53 or started to trend well below 53 intraday. Then I would probably exit. But that looks like a good trade. I was actually thinking about getting back in on the the bullish credit spread on Snap that we had done got stopped out of. Got a small profit on it. Excellent. Looking good so far. Let's go to Visa. Okay, let's see. Visa gapped down today. Yeah, what's going on? Do you know what's going on that? On Visa, Roy? I wonder if I don't think it's earnings. They did earnings a couple of weeks ago, if I remember correctly. Let me look real quick on that. Going to the earnings page on Yahoo Finance. Yeah, Visa gave a decent earnings report back on October 26th. So I don't know what this gap is about. I'd have to check the news. When something like this happens, I always want to check the news to see what's going on, to see if I think it's, something that's going to follow through or not. Then I'm going to usually watch the stock for a day or two. And then if it's trending down from here, then I would enter a short trade or buy a put or sell a call. Okay. But right now I'm flying blind because I don't know why it gapped down. Maybe there's no news. Sometimes that happens. If that happens, I can't figure out why it's happening. Still, if it's trending down, I'll probably would trade in the direction of the trend. Okay. Mara, let's look at Mara. Okay, Marathon Digital Holdings. Okay. Got a good uptrending stock here. It was at 32 a few months ago, and now it's at 50. Pull back all the way from 83. So this thing's volatile. PE ratio, you can see at the top of this chart, is negative, which means they have negative earnings right now. Which means whatever is driving this stock up, it's based on hope of the future, hope and hype. I don't know much about this stock. I'd have to research it, but I don't know. This is what I would call a highly speculative stock. If you buy into it, if you buy into it, you want to see it start to go back up, cup and handle type pattern, where it starts to break above the highs of the past today and yesterday, above 58. If it does that, starts to charge back up, regardless of my knowledge about it, I'd probably buy it because I think it's going to go back up to the highs. And then if it goes like below the lows of today's candle, I'd exit. That's the basic entry and the basic stop on a trade like this. Let's see. Visa said it will no longer accept UK credit cards. Okay. Visa says Amazon no longer accepting UK. Okay, got it. Thank you for that news, you guys. But back to Mara. Yeah, I like to do the background research to see what's driving the stock and, what kind of stock it is, what do they do, how long have they been around, how much money they make, their sales. Even if this company does not have earnings, they're losing money right now with a negative PE ratio, assuming that that's current, then I want to see what their sales are. How fast are their sales growing? It's perfectly normal to see a pattern like this for a chart for a stock that has great sales. It's growing really fast, just hasn't turned profitable yet. So this is fine. But if this is one of the highly speculative stocks that doesn't have very good sales or doesn't have earnings or doesn't look like they're improving towards becoming profitable, then this is going to be a stock I will want to sell short at some point. But not right now. It's still in a long-term uptrend. So that's all I can tell you. That's all I know about Mara right now. Okay. Do we have any other stocks we want to take a look at? Otherwise, I'll see if there's any others on my list. Okay. Next week, we're going to talk a little bit more about how to play the news, how to anticipate where stocks are going to go based on trends, fundamental trends going on in the market, like inflation. How do you make money when inflation is going on? We're going to talk about that next week and how to profit from that. That's really all I've got for right now.
Greg, much appreciated, and look forward to next week. Thank you again for giving your time and, you know, looking over these tickers and just helping keep this audience move. If we don't have any other questions, we can wrap it up. Thanks everybody for your time. I don't see any other tickers or anything else, so we'll just call it a day. All right, everybody have a great week and a great weekend. And Greg, we'll see you next week. Have a great weekend, buddy.
All right, thanks everybody. Have a great week trading. And if you have any questions, you can always email options@thetradersplan.com.
Hey, thanks, Neil, for the kind words, man. We appreciate it. If you have any questions, you know how to get a hold of us.
Okay, thanks, guys.
Take care, everybody.
Bye-bye.